Hi guys, it's Ian from OSBFX. It is Wednesday, the 5th of January 2022. It's 5 o'clock in the evening in the UK. Firstly, I hope you had a fantastic Christmas and I wish you a very prosperous 2022. Secondly, let's get to the charts. We've had one setup overnight. I'm going to explain how that was formulated, and then I believe we're going to get another setup pretty soon. The overnight setup was in Euro against New Zealand. Now the dotted lines are my support and resistance levels, and basically what I'm looking for either formations to complete or for legs of the formations to be very close to completion to take a trade idea. So we're going to work off the 1 hour chart. We then go round to higher time frames. So this is monthly, weekly, daily, 8 hour, 4 hour up the top on the right here, and like I said, the hourly down here, and you can see that we've got this dotted line. That's a pretty short-term support level, but it's at 165.41. If I put my cursor over that low candle and we look to the top left-hand side of the screen, we can see that 165.412 was the low trade. So pretty accurate entry for the euro against New Zealand. And then we've seen this impulse move to the upside. Where is the target level? Well, then I'm looking at higher time frames to try and form another pattern that will highlight a target level. And here I've got two bespoke resistance levels lining up with the 88.6%, which then in turn lines up with a bat formation. So basically taking this long trade for this potential reward. And the reason why I really do like the bat formations is because with a bat formation being close to the 88.6% pullback level, you know where your stop is. Your stop is below the swing low. And if we go back to this chart here, and I'm going to give this some leeway. So let's say we didn't get in until 165.65 and we're going to get out at 167.82, and we'll have a stop below the swing low and give loads of room for spread, etc., blah blah blah. We're still getting sort of 5-to-1 on a risk reward basis as far as euro against the New Zealand dollar is concerned. And if we go back to single currency charts, we want some confirmation here that we're going in the right direction. And okay, let's have a look at New Zealand dollar. What we've done here, we've hit a double resistance level a few days ago, and we moved to the downside. We can see that this is quite a decent upside barrier. It's hit it 3 times now, or actually 4 times. So the bias, I believe, is still to the downside in New Zealand dollar. And if we go to this time frame here, we got a 261.8% fib near a previous swing low. So even though I don't think New Zealand is really the driving force in this trade setup, the bias is still mildly bearish. If I go to the euro, we go to this chart here. Okay, we've seen this impulse move to the upside from close to a 61.8% pullback level. So again, I've got resistance levels up here. So I believe that the euro is going to push up to this resistance level, then come down to form a Gartley formation. But at the moment, the bias is still bullish. So that's a setup that is basically underway already. Let's get rid of that. But one that's on the watch list is the sterling against the Canadian dollar, and I've got a trigger level of 172.66. I thought we were going to get there a minute ago actually, and just dipping lower to 172.36 at the moment. But let's go to that setup. So here, again, it's only one resistance level, but what's happened is we've impulse moved to the upside, drawn back to bespoke support, and then a pushing higher. Now I've got resistance at 172.69. I've got a perfect bat formation located at 172.69. So I'm looking at selling sterling against the Canadian dollar. If I go to single currencies, here I've got quite a wide band for sterling. So basically we could say that this is a formation pattern, but like I said, we've got probably where are you? Here. You've got this sell zone to the upside, and it's quite a large sell zone, but it does offer a downward bias as far as sterling is concerned, breaking into this zone. So remember, we're not selling, or I'm not selling sterling against Canadian dollar at the market. I'm looking at selling into rallies, and when or if that gets up to these levels, then going back to sterling, there's a good chance that sterling is going to get up towards the top end of this range, which will offer my bias in sterling. And if I go to this time frame, okay, this is the weekly time frame, we're potentially getting to the top of a BC leg in a very, very large crab formation, which will give a very negative bias in sterling over the medium term. Remember, this is a weekly chart, so you're looking at sterling devaluing a hell of a lot, and I think that's going to be the driving force behind this sterling CAD setup. I don't think it's really going to be the Canadian dollar. Now, a popular pullback level for a BC leg is 88.6. So if we go back to this chart, we can see we're getting pretty close to 88.6. Also note how many times was 88.6, or this area, a resistance level, quite a few. If I put a horizontal line on there and I replicate it across the time frames, and I'm going to put it in red because it's not a proper level, and we go to here, so I'm getting that 88.6% pullback level in the middle of this sell zone. Let's have a look at the Canadian dollar. So basically we want the Canadian dollar to continue to move to the upside. If you remember some time ago, and it will be some time ago now, going back to the 21st of December, we had this formation, crab formation, that completed, and then we've continued to see this decent rally to the upside. So will this continue? Will the Canadian dollar continue? Well, BC legs, like I said, are quite hard to forecast, but like I said, 88.6% is a popular pullback, so all the way down here, which would be in the opposite direction of where we want to be going, but also 38.2. So basically, if you study sim patterns, then sim patterns suggest that you should get a 38.2% pullback, which is here, or an 88.6% pullback. So there's nothing to say that this little pullback to there, the 38.2%, is not going to be the completion before the rally to the upside. So I'm not trying to bend the rules, but the negative bias in sterling is extremely negative as far as I can see, unless we can break that high trade. And I do like trading off 88.6% pullback levels. So we've got the negative bias in sterling, we've got potential positive bias in Canadian dollar. Like I said earlier, it's very rare that you get both that line up together. What is more important is going back to sterling against the Canadian dollar, and it's the fact that we get a perfect back formation at 172.69, and that has bespoke resistance along with it. Okay, guys, I hope that makes sense. Good luck with your trading. Oh, stops and targets, most important thing. What did I say about bat formations? Well, the great thing about bat formations for me is that the stop is above here. So I'm looking for a stop around about 173, 173.05 to give it a little bit of leeway. And with regards to a medium-term setup, we could be looking at a decent leg to the downside, all the way down to sort of, these 167 area in the medium term chart. Okay, good luck, and I'll be back soon with some more insights. Many thanks.